Good morning, everybody. Alright, so give me just a couple minutes to get my bearings. I did not have the best sleep last night, so. Okay, so I need to make some notes really quick. Okay, let me check the daily 5 mall really quick. Well, we're gonna have to check that at open, but it's going to be anywhere from the 740 to the 741. Dollar should be pushing up today, very likely towards that 101.80. Oil is down currently. However, very likely that's going to turn into a cup and handle. Sorry if it sounds like I'm shivering. My room is absolutely freezing right now. So we're pushed up on the 1 hour upper Bollinger currently. May not hold that way for the open, but we are up there, which means that very likely we are going to start pulling down slightly. Now we do have this potential cup and handle forming here, but as you can kind of see from the picture, we are also within a head and shoulders. So today is going to be kind of the tug of war between, are we going to push up and complete that right shoulder, which that right shoulder could take us all the way up very, very close to the top of that channel. Basically up in there. Or we could see the right shoulder break down into a smaller structure and then start pushing through that 735. Good morning, everybody. Now, what I kind of want to go over today is more long dated positions after we get all the levels figured out, max pain, the gamma, everything else like that. Because I'm going to be selling some of my ACN positions today, which means that I'm going to have some money to set up more dated positions. So, alright, so let's see the SPY max pain. So 742. Go ahead and get that labeled on here. And then I'll just make the call wall and put wall while we're here. Now just remember we have to wait for the market to actually open before we see these levels updated. Okay, let's make that in white so it's not so imposing. Okay, we also have semis down very, very heavily right now. They did complete that inverse cup, which means that we should be expecting some bullish structure, which I can already see starting to build just off of the get-go. And from that bullish structure, we should be expecting basically a handle before pushing down even further. As we do have the cup formed there. Didn't draw that perfect, but you get the idea. And on QQQ, kind of a breakdown even below that. So let me get some of these ranges marked really quick. So 668.17. And these 680. Wow, so we really don't have a lot of support below us right now. But we do have that 668 support. So if we are going to aim for a push downward, that's where I would be aiming. We're going to go ahead and delete some of these older support ranges as they are no longer relevant. We're going to keep the 685 just because we may end up trying to build support upon that. $695.85 or 89, excuse me. And we will make that resistance. We're actually going to delete some of these other prior resistances as they are no longer too relevant here. Now, based off of QQQ's structure, which we're going to go ahead and delete this buying channel as we no longer need it currently. But based off of QQQ's structure, we do have this very large double top formed, which we've all known about that for a while now. It's no surprise really. However, from that double top forming, we are now starting to work on this very, very large inverse cup. And that inverse cup should take us down to the 668.17, which is also right at the bottom of our selling channel. So I don't really expect that today, but it's not exactly out of the picture of today. I'm expecting the large selling to really kick in tomorrow. But again, on all of our main stuff, we kind of have structure ready to push us down. I think semiconductors are kind of the only outlier here where we've already completed that inverse cup, potentially can start building support upon that, and then head down further. But the same structure still applies. We still have the very large head and shoulders, which is leading into that extremely large inverse cup. So I'll get SPY updated with everything on open. But as I promised, we are going to be going over some dated positions. So I have a huge list, and I'm not going to be taking all these trades. Only going to be taking a few. But these are all trades that I think are really good. Okay. So the first one is on HIMS, and we can kind of ignore some of this. But we are in mean reversion territory. Okay, and this is the second day of the lower Bollinger, meaning I do expect a little bit of a lower low, and from that, usually you get pretty large upside. So I'm targeting the 35 calls for HIMS for September 18th. The price on these should be anywhere from about $250 to $300 per, but that gives you basically a month and a half duration. And if we see our price target hit, which we're really just looking for the 20 mile here, but if we hit that price target, that contract's probably going to be worth about $700, $800. So pretty solid contract. Next one, and market opens in actually 5 seconds, so we're going to swap back to the SPY. Now remember, we're just going to give it about 5 minutes to update the call wall and put wall, and then I will get those marked out. Same with the volatility, that'll be updated in just a few minutes. And my ACN contract sold for $1,720 per. Super happy about that. I bought those for $310 per. So that was a super awesome trade. Very stoked about that. Okay, let's check our HIG. The HIG is currently at 79.27. Did open at the 79.32, so if it continues pulling downward, that's going to be overall bearish for this. Waiting for the VVIX to update. And there's that very large push downward. I know some in the stream didn't get a catch early on, but we did talk about how this was pushed up into the upper Bollinger on the hourly, so very likely we were going to see that move down. Very cool. Now, we are within mean reversion territory, meaning that technically we're sitting at a call range right now. Volatility has updated, It was at the 151, did pull up to the 101.12, and it's currently at the 198, so never mind, just updated, it's at the 101.28. So don't take any calls until we start seeing our volatility pull back downward, even if we are in that mean reversion territory. No, I'm not going to be taking any 0DTs today because I do have a doctor's appointment extremely soon here. So I'm not going to have a whole lot of time today, so that's why I want to really focus on some of these longer duration contracts. But I do want to get the call wall and put wall updated. So call wall and put wall is both at the 740, and this will absolutely change. So we're just going to mark that in yellow right now. And then this one we're just going to make it super skinny and drag it far out of the way until we get the put side updated. Now overall, I am leaning bearish on the SPY still. A couple reasons why. Is that again, this selling channel has been respected almost to the penny for the last couple weeks. Yesterday we saw in the pre-market how it hit the top of the channel literally to almost the penny. I mean, you can't get much closer than that, and had a massive rejection. Now, we did talk about in the video last night how I do kind of expect it to pull sideways, create this right shoulder, and then head down further. That's still the same thesis, but I don't know if we're going to see that full pull down today. One thing I do want to show here though is that we are starting to create an even smaller head and shoulders here. And you can see this on your 30-minute time frame pretty clearly. So if we do sit here and build that right shoulder out and start heading down, then that won't be a surprise to anybody. But remember, we are within bearish conditions right now. And the reason why I say that is because on the daily time frame here, pulling up our moving averages, we see that if we ignore the 50-day moving average, and for those that just joined, I will say whatever MA, meaning moving average, so just understand that. So the 5 MA, the 10 MA, and the 20 MA are positioned within a perfect bearish alignment right now. Okay, we have the 5 MA below the 10 MA, 10 MA below the 20 MA. So perfect bearish alignment. If we see a close below the 743.94, basically below that 50-day moving average, then tomorrow we're going to see the 10 MA underneath the 50 MA as well. So currently the 5 MA is underneath the 50 MA, working on the 10 MA crossing underneath that, and then the next step is for the 20 MA to start pulling underneath that 50 MA. And that's getting dangerously close. I don't think we'll see the 20 MA pulling underneath that level this week, but it can, especially if we do get this lower Bollinger move on the daily time frame. So the lower Bollinger is currently at the 735.98. That means that we would have to close below this level. I'm just going to mark it in white box for a moment and turn off the moving averages, but we'd have to close below that level to secure that day one lower Bollinger. If we do secure that day one lower Bollinger today, then that means that tomorrow we would have the expectation of a lower low. Okay, I don't think we're going to be pushing into that lower Bollinger today, or at least closing below that, because that would be a close basically at that 734. We could close right at that 735 and it'd be okay, but I do expect more of building some support in this range building more support in that range before continuing to push down. So I do expect us to head downward in tomorrow's FOMC. Doesn't really matter if we have a rate pause or a rate hike. The expectations are highly divided, and because they're highly divided, that still means that the market hasn't fully priced in the decision. Okay. So is everybody on the same page with what the expectations are out of the SPY? Or if someone asks you, will you be able to help your fellow trader out? Because I'm not going to have a lot of time to go over the SPY today. Okay. So if you do have any questions about the SPY, make sure you go ahead and ask while I'm here. I'm going to be here for about an hour and a half right now because again, I do have multiple different appointments today where I have to drive about 40 minutes just to get to the first one. So I'm going to be very busy today. But if you do have any questions, feel free to ask. But I do want to focus this stream more on going over some long dated positions that I'm interested in. Okay. So back to my list. We went over HIMS, and we did talk about how the contract should be about 250 to 300. Currently it's at 252 for the mid price. Okay. Or the mid price, excuse me, is at 259. Okay, I think this is potentially a very killer trade, and actually a trade I want to engage on. So I'm only going to buy a couple contracts for this, and we're going to see if we can get it at 250. So we're going to start our price at the 247 and slowly climb it up until we get a contract fill. Make sure you're not market buying any of these contracts, by the way, if you do decide to join me in my endeavors of dated contracts, because you will lose money if you do a market buy. Okay, it did get filled for the 259. So cool. Let me write that down. Okay, so HIMS, I really like that trade. Again, we discussed why. It's in mean reversion territory, meaning that's exactly what I like to buy. And the next one that I'm looking at is Johnson & Johnson. Okay, and we're going to see a couple of these healthcare stocks being in this exact same position. But within this mean reversion, we are above the upper Bollinger. Okay. Now, this isn't a trade I'm going to take today, just because this is still only the first candle above that. I was looking for this to close the 269, basically create that cup. But usually we will see a higher high from the second candle within that upper Bollinger. Okay, so this is a trade we're going to be looking at tomorrow, but I just kind of want it on everybody's radar. And I want to make sure I write a note about it so I don't forget. But the calls that I have watch listed are the 240 calls for September 18th. I'll see if I can get a call for about 157. I know that's well above the open price. I know that's well above the mid price. But if I can't secure one of those calls for that price, then that will be acceptable. So again, I'm putting a limit order in at 157. Oh, and it actually got filled for that price. Cool. So I might add on to that contract tomorrow then. But same thing we're looking at with Johnson & Johnson. We're also looking at with Merck & Company. Okay, now this one I am going to be patient and wait for tomorrow, just because I do expect a higher high out of this. And again, this is mean reversion territory. So the watch list, or for the contract that I have watch listed, is a 125 put. And I hope on Johnson & Johnson I said put. I took the 240 put, so I hope I didn't say call. But for MRK, I have the 125 put watch listed for September 18th. I'm not going to put an order on it today just because the premiums are a little high right now. We do want it to pull upward further, and there's plenty of room for it to do so. So we'll try to be patient for that one. Let's see what's next. Next one I'm looking at is Elf Beauty. Okay, now we do have bullish structure here. We do have to be cautious of, but I still stick to my rules, which again means mean reversion. Mean reversion means that this is something I want to short. Now I didn't get a chance to look over the contracts for this last night because it was getting fairly late. But let's see what the contracts are for about that 75 strike. And I want to look at September. So those are fairly expensive, so I don't want that. That's probably why I didn't add any of these contracts, because the premium's very high right now. Yeah, I don't really want to pay 300 something for one of these contracts. Usually that's what I'd be paying for something that's a triple digit premium, not on this. So we'll go to the next one. And I could type these contracts out in chat. That's September 18th. All these contracts are going to be September 18th, okay? So 1 second, let me see what the next one I got. Next one is LDOS. It's some holdings company. Now, again, we're very much within that mean reversion territory. And the contract that I'm looking at is the 100 strike put. Okay. But I might look at a couple other different contracts here. Let's see, the 100 strike put. It's actually well priced. Let's see if we can get one of these for 150. And I'll type this out in a second. Same with the HIMS contract. I'll type in chat what I buy. Says the mid price is at 185, but I do think we can get it filled cheaper than that. Okay, so we got it at 180. So I'll type this out in chat as well. I'll check SPY in just 1 second. And then for HIMS, we might add an additional contract just because it is very cheap right now. And then we did get the Johnson & Johnson contract. So J&J. Okay, so a couple cool trades in there. Now I do want to look at some things really quick. And let me go back to the SPY. Yep, this is definitely kind of that range that you could take a call. Now, be careful trying to hold that call too far above the 739. However, again, currently with the call wall and put wall being at the 740, that does mean that from a dealer perspective, we should be seeing above that 740 again. But let me go ahead and look at the gamma and see if there's been any shift. Nope, so the call and put wall are still at that 740. So those calls should be okay. Just again, be cautious of trying to push too high. Alright, so let me look at a couple other of these trades that I'm watching here. Okay, so ONDS puts are doing good already. Now this one should be a cheap trade. And again, you do have to remember that not every single one of these are going to work out. If they do all work out, then even better. Now I know the whole semiconductor is kind of eating dirt right now. And we do have this very large head and shoulders formed. So there is a big potential that just because this is within the mean reversion territory, that it may not be ready to take calls on. However, the calls are still fairly cheap. So, but I want to see the volume on them first before we really start engaging. So I'm looking at the 3.5 straight calls here. So give me 1 second. Okay, so I took the Indy 3.5 straight calls for September 18th. And I'm getting these all kind of for September 18th because that's one of the major expiries, and two, it gives us, roughly a month and a half. And I paid 0.45 per. Okay, let me go ahead and start looking at some of my other positions I want to look at. Actually, no, that covers it for right now. So we'll go back to the SPY. And I want to look at QQQ here. Very, very close to the low of the day. ACN absolutely is flying. Kind of wish I held the 150 call that I had this week. That'd be worth so much right now. And let's see what semis are doing. So semis did push to the 483. Volatility was at 102.29. It's currently at 101.56. The HIG was at 79.25, currently at 79.29. So we're going to go ahead and engage on a SPY call here. Isn't the most opportune entry, but it will work. And the calls that I want here, I'm just going to take the 38 strike, or the 738, excuse me. And again, I'm just looking for an exit at this 20 mile here. Nothing super special. So we will mark that. We'll put it in green, even though that's super annoying. And we'll write a note that this is going to be our call exit. Now we are seeing the ADL starting to head upward a little bit, so I'm not too worried about the calls absolutely dumping right now. We're seeing QQQ starting to buy a little, and we're seeing semis starting to buy a little. Volatility's slowly pulling down. And we did hit that bottom range where we're expecting that inverse cup slash head and shoulders to kind of pull down towards before pulling upward. Now, potentially they might want to be pushing for some of these support ranges prior to pulling up. But so far going to hold the call. It could be because you're trying, I don't know if you're trying to do a market buy or anything. Um, let's see, I got GNG, put spreads. So I don't do a whole lot of spreads, so I'm not the best expert on that. But usually I try to limit purchase all of my contracts because a lot of these contracts do have a very large, um, and we're going to use the same word here, because unfortunately it's used in the same way but different context. But the spread between the buy and the ask is usually very large. Um, so I usually try to find the middle ground on those. So I'll never just market buy. Now, when I decide to do just a naked contract versus spread, usually I'm trying to target a mean reversion, meaning that, and let's go back to Johnson for a second here. So by mean reversion, I'm looking for it to be pushed outside of the Bollinger. Okay. Um, Basically meaning that it's off the road. It's out of the norm of what the standard price is trading for. Okay. Now, granted, our prices will never just stay on the 20-day moving average, but that 20-day moving average is the neutral position, and that's kind of where the price gravitates towards. Okay. So when I'm taking a mean reversion, usually it's above or below the Bollinger on the daily time frame. Usually I try to wait for the second day candle. We don't always get that. Sometimes we only get that single candle here, kind of like in this situation. Sometimes we only get that single candle outside of the range before our position starts taking weight. Now, what I tried to do with Johnson & Johnson today was put in a pretty low bid, and that low bid ended up getting accepted. So that's kind of the way that worked out for me today. But with taking the spread, um, remember you are usually taking a strike higher and then a strike lower as well. So have to be very careful with if you're market buying or limit ordering on those. Because sometimes if you try to go buy the spread at the market price, you could end up losing hundreds of dollars just for buying the contract. My average for Indy is 0.45. And our SQQQ calls for September are almost in the money, so I'm very happy about that. I have a ton of the 50 straight calls, and currently it's at 47.45. Was almost at 48 today, so this will be at 50 plus, and probably sometime this week or next week. So our SPY call is in the green, not much, but again, we're still targeting the exit at this 20 mile range. So HIMS is taking a little bit of a beating right now, but I'm not worried. Again, our calls have more than enough time. Volatility is still dropping. It's at the 101.25. Still elevated, but it is dropping a little bit. QQQ starting to near the 671, so that's seeing buying. And semis, they were at the 483, now at the 488. So those are starting to see a little bit of buying as well. I want to check the 1 minute time frame here. 1 second. Sorry, my wife brought me coffee. Okay, so we're still seeing the same thing here. Just a 1 minute time frame. We did get close to that upper Bollinger, pulling down towards that 20 mile a little bit. Should be getting ready to push back up again. So our call should do good here. Now I don't have a market conditional order set, but I think I'm going to set one at the, let's see, let's do 738.81. And that should cover our move upward. Sorry, Wonders. Good morning. I just saw this message now. Thank you. Thank you for the kind message. I appreciate it. So I'm going to take a second to warm my hands on this coffee cup because my fingers are actually ice right now. Now on the 1 minute time frame, we're very likely pushing upper Bollinger, which means that with these calls, we should expect a little bit downside before kind of pushing upward again. Shouldn't be a whole lot of downside though, because again, that's on the 1 minute time frame. The HIG is at 79.30, so that has been seeing a lot of buying. QQQ is still at that 670, almost 671, but still 670. Volatility has been dropping, so it is at 182. 1 minute time frame, I believe we're at the 20 MA, potentially even the lower Bollinger. So we're at the 20 MA currently. I do expect it to kind of pop up from this range very soon. Semiconductors are at 485. So if we can see continued buying in that, that would help our price. But semis and tech should be seeing kind of the same structure within their 1 minute, 5 minute time frame. So I'm not too worried about that right now. Volatility is at the 101.01. So we did have a slight pull up in the volatility, but it's not overly concerning right now. Again, it was at the 102.20. So once we see that expansion within the 1 minute time frame, we should be able to get our exit at this, 739 range. Could have ended up selling those calls for like 1900 each. Now we are seeing the ADL pull down a little bit. Sorry if you can hear my daughter yelling. Starting to see buying out of QQQ and semis. So we should be getting ready to push here very soon. Based on today, until we see the call and put wall shift a little bit, what I'm really wanting to see is the put wall expand downward. Once we see that, then the conviction to take puts will be a lot higher. But until we get that point, right now this is telling us that dealers want to trade around that range. And our max pain's at the 742. That doesn't always mean that the dealers want to aim for that area. But that is a little bit of a magnet pulling towards that. So along with this call and put wall being at that 740, till we see it shifted, which I'm going to check right now. Okay, so it has finally shifted. So let's get this updated. So let's see, call wall still at that 740. And the put wall is at the 737. Which means that currently, very likely dealers are trying to sell high IV puts at or below this put wall. And we should try to be targeting slightly above the call wall or at the call wall. So that thesis still remains the same. For my call exit, it's still going to be close to this 20 mile range, so. Now I want to look at the 1 minute time frame. So we did get that expansion. Now we just need to reclaim the 20 mile support on the 1 minute time frame, and then it should be off to the races. But we are going to move our market conditional order down to the 738.68. No, I don't like even numbers. 67. Now volatility is at the 101.26, so it has been pulling up very slightly. Semis have been dropping down a little bit, so they're currently at the 483. Remember, they did pull up all the way to the 488. And QQQ's at the 668 when it was very close to that 671. So we still have room on QQQ and semis before really heading upward. And I have this at 67. So that's where my MCO is listed. And I want to see the HIG. The HIG is at 79.28. So it was at 79.30. But that kind of reflects some of the selling we've been seeing. As long as we can get buying in semiconductors and tech, then we'll see our upside. And I want to go ahead and delete these just because I don't like the extra noise on the screen. And at this point, we're just waiting for semis to start pulling upward and tech to pull upward. Volatility is still at the 101. Never mind, it just jumped up a little bit, so 101.32. So if we continue to see volatility moving upward, then that might shift our thesis a little bit here. One minute time frame. Haven't fully closed this inverse cut, but it is looking fairly strong at this point. But because we haven't fully closed it, we're still within this bounds of the cup and potentially handle forming. Semiconductors are pushing for a new low though. which is a little concerning. QQQ is building some support off of this major support range, which is all the way back from May 4th. So we'll see how well that holds. I do think they're trying to sell really high IV puts right now before doing a move upward. Lines very well with what we usually see when we're trading against these call and put walls. Starting to see a little bit of buying out of semis. Not a whole lot yet. But it is starting to pull away from the lower Bollinger on the 1 minute time frame. Same with the 5 minute time frame, but not too concerned about that just yet. Now we do want to be seeing QQQ building support, meaning heading upward, not continuing to push down, so that's a little concerning. Volatility did pull down again. It's at the 101.16. It was at the 101.42, I believe, if I remember correctly. QQQ is seeing some nice buying right now. So it's back up to the 669. We'll see if we reject this 20 mile on the 1 minute time frame or if we continue buying through that. It's looking very good to continue buying through, but we shall see. If we do get the move upward, then that would be telling us that very likely we're heading up to that 672. Same with semis here. Once we pull up towards that 20 mile on the 1 minute time frame, that'd be the 485. If we can secure that range, then we should be expecting this 489 through the 491. So far, it looks like QQQ is starting to reject this a little bit, which is not ideal. Again, what we really want to see is buying above this 20 MA on the 1 minute time frame. Because without our QQQ buying upward, then we won't be seeing our SPY price move up. So that's why I'm really focused on what's going on with semiconductors and QQQ right now. Volatility has pulled down a little bit more, so it's at 195 or 100.95. Starting to see some buying above that. There we go. Okay, and we're going to move our MCO on the call to the 738.37. Even though I do think we can push well above that, I just don't have a lot of time today, so I want to make sure to secure profits. The HIMS calls are getting battered a little bit, but that's kind of okay. HIMS is down like 8% right now. So I still like the trade a lot. I'm just kind of inclined to add another position. Which I'm going to do actually. I'm going to add another HIMS call here. Put a low limit order in, so if it buys, it buys. If not, then it doesn't. Volatility is still pulling down, so at the 170. Just need to see a continuation of buying in our QQQ and semis, and we should be good to go. And I have this set for the 37. Starting to see some decent buying out of QQQ and semis, so if we do see the continuation within that, it will be good for our calls. Alright, so my average on HIMS now for those call contracts is 224. Now I'm not going to adjust my MCO here, I'm going to go ahead and just keep it at this 738.37. I do think we'll push up to that range. Just have to be cautious though, because the 1 minute lower or upper Bollinger is obviously not up there. ADL on the 5 minute time frame still looking pretty grim right now. Assuming we get our exit, after that I'm gonna go drink some coffee really quick. So I'll be mute. But that's after we get our exit. So going to be patient for that. Now again, we do have to be kind of cautious here because I do have the MCO set above the 20 mile here. We could just pull to that 20 mile and reject. So we have to be super, super cautious of that. But we're seeing volatility still pull down. If we can get QQQ pushing that 171, 172, that'd give us our exit on these calls. Look at the 1 minute structure here. So we do have an inverse head and shoulders forming. So we should get our push. Kind of same with QQQ here. Semis still need some work. Hold on 1 second, my daughter's knocking on the door. And I'll type the strikeout in a second. Sorry about that. Okay, let's see. Let me check chat really quick. Let's strike for Hims. It is the 35 calls, so I'll type it out. And then my average is 2.24. Yeah, I know. So Korea's going to be selling very likely almost this entire week. I think I missed my exit when my daughter came in here. It happens. QQQ's looking okay, so maybe I haven't missed the exit just yet. Volatility still pulling down. It's elevated, but still pulling down. Okay, my call did get sold on the SPY, so that's perfect. Actually, I think I nailed that almost to the penny. It was 1 cent below. Okay, perfect. So one thing to keep in mind about a lot of these mean reversion contracts is that very likely they are going to work against you at first. Might take a couple days for them to start pulling, towards their price. Just kind of the nature of, taking contracts in the mean reversion territory rather than buying into the trend. Cool, so everybody's calls should have done pretty good. Didn't make a whole lot on the calls, but made a decent amount. I'm super happy with how this trade went for ACN. We entered at that 118. We had a bunch of different strike calls. We had 130s, we had 150s. But hit right where I expected it to. So let me go ahead and see if the gamma is adjusted on SPY. So currently it says the call and put wall is at 740. So I do think that's going to shift again. That doesn't seem right. At what range should we enter puts? Well, based off of where the call and put wall is currently, that's telling you that we should be seeing this 740-ish range. I don't really agree with that though, because I think the day's, overall pretty bearish. Um, so I don't know if we'll fully see that range today. I don't really feel like the put wall and call wall are right at that level. It might show that right now, but I do think that that's going to shift back to where we see puts lower than that again. So that makes it kind of difficult. Um, we do have this left shoulder built in this range of liquidity. Sorry for covering the screen with the big yellow box, but just need to kind of show that for a second. We'll change it to blue so it's not so blinding. So I would expect a lot closer to that 739, realistically, before trying to enter puts. And as always, I usually try to go for mean reversions, meaning I like to target contracts outside of the Bollingers. So very likely we're going to be seeing that upper Bollinger pull downward. And once we do get the push into the upper Bollinger, whether it's at that 740, whether it's at the 739, 738, doesn't really matter. But that becomes the territory that I would put, enter puts at that point. So I do need to go in about 10 to 15 minutes. I'm going to probably make it about 10 minutes because I do need to message some people. Um, for example, like Jin, I need to message you, um, as I promised I would. So if there's any questions about the day or anything else, right now is a really good time. Now for Thursday and Friday stream, it will be a lot longer. Again, Monday and Tuesday, I had a ton of appointments this week. Nothing I could really do about that. Which is why I was kind of hesitant to even take positions on the SPY today. But once that trade opened up, um, it was well within that time frame. So worked out. We got our exit. But if anybody does have any questions about anything, right now is the perfect time, whether it's a symbol, contracts, whatever. Volatility continuing to push down, so again, I'm really looking towards that 739 range. Now, again, kind of the thesis of the day is that with the call and put wall where it is, I'm not going to show the call or the put wall at that 740. I do think the gamma is going to adjust downward again. Um, but with the call and put wall basically being at that 740 right now, this is telling us that dealers want to sell high IV puts underneath this range and sell high IV calls above that range. Okay, it doesn't mean that's how it's always going to work. There's days where we'll see one wall pretty much entirely ignored, but on a standard trading day, usually that's what you can expect. So based off of standards, based off of what's the average, we should expect heading towards that 739 to 740 range. And that's where I would aim my puts at. Um, but I do think puts are kind of the big trade today. I do think that that's the correct position to be focusing on later. Just have to really time it correctly. And again, if you if you aren't very, very precise with your timings, then just look for mean reversions. If we start seeing the calls, blasting above this upper Bollinger and it's above the call wall, well, what's that telling you? That's telling you that dealers are selling super high EV calls and that the expectation could be, or should be, that we're going to pull down and close in between those walls. It's a little wonky when we have the call wall and put wall at the same range, but again, I like I mentioned, multiple times, I do expect that to shift. So very good trading day today. Now, one trade that I do want to bring up is SQQQ. I know these contracts are a little more pricey. However, many of you are trading SPY anyway. Usually you're putting, between $70 to $100 per contract in SPY. But what I'm taking right now and what I actually have a pretty large pool of contracts going for is the SQQQ calls for September 18th. So I do have the 50 strike and the 55 strike going. Actually, I have a ton of those contracts. I did buy some of the 55 strike calls yesterday, and those are up $60 per. They are expensive. I do think that you should try to stick to that 55 strike for the calls there. And again, what SQQQ is an inverse of TQQQ and an inverse of QQQ. So it's a bear ETF. So calls are basically puts. Puts in that situation are basically calls. So you could get the 60 strike calls for SQQQ. I'm a little concerned that they may not hit into the money. Because what you really want them to do is hit in the money and then start pushing basically deep into the money. But that's a trade I like a lot right now. I think it overall is going to go pretty dang well. So here's our 739. And my IBM shares are finally green. Now, I know ACN has its earnings today, so I'm going to be a little upset if it runs to like 180. Um, but it is what it is. Gonna check the gamma one last time before I go. Still have the call and put wall at that 740. Which means if we continue to hold that range, that we're going to be selling high IV puts underneath that range, high IV calls above that range. Okay. And potentially if we do pull up to the 740, 73, that can create a bullish cup and then work on a handle. So just be a little cautious about that. Volatility has been dropping pretty hard though, so it's at 99.35. So that's going very well. The HIG is at 79.31. Remember, it did pull down to the 79.22 this morning. Okay, everybody, I'm gonna go ahead and call it here. Thank you so much for watching. Sorry for the very short stream today, but I will be back on Thursday. I might try to stream FOMC tomorrow. Can't promise. But based off of my calendar and everything, I should have time. So potentially I might be able to do that. I won't be able to stream tomorrow morning though. But I will try to do the FOMC if I can get back in time. So other than that, I hope everyone has a great day. Feel free to tag me in the Discord or anything, and I'll try to respond when I can. Jin, I am going to message you in a couple minutes here, so look forward to that. But have a great day, everybody. Take care. Thank you for watching, and I hope you're able to make some money. But yeah, have a good day, everybody. And I'll see you either in tonight's video or on Thursday.